On this week's episode of the Extraordinary Exchange Podcast, we got the man, the myth, the legend, the Panther, Mr. Lawrence Eggleston himself. We had some technical difficulties, so I couldn't be on the whole episode, but Ben...
So I bit it off, and we made Lawrence talk stocks. Check us out. Next episode coming soon.
All right, bet. We here, we active, we live. What's going on, ladies and gentlemen? Welcome to another extraordinary episode of the Extraordinary Exchange Podcast. I'm your guy, Nate Bennett. Got my dude, Benzino. What's good, Benz?
What's up? How y'all feeling out there? We rolling. We got a big guest tonight, Bennett.
A big guest, another illustrious guest. We had pulled out the woodwork. Definitely, we're day one fans, mutual fans of each other. Back in during the pandemic, early Clubhouse days. First saw him outside of Clubhouse, just pulling up on corners nationwide doing a corner class, which I thought was dope as hell. Just pulling up to different cities, pulling up on the corner with a marker and a whiteboard, just teaching people about financial literacy, stock market, sharing his testimony, and making it real, making it tangible for all those new investors that were just coming into the market. They had a recognizable face and voice that they could put to the markets. You know what I'm saying? People weren't talking over their heads like people were doing in the past. It just made it really dope. The man, the myth, the legend, CEO of Black Wallstreet Originals, the Panther himself, Mr. Lawrence Eggleston. What's going on, Lawrence?
Yo, man, what's going on, guys, man? I'm excited to be here, man. Appreciate you guys opening up the platform. Definitely, like I said, excited to be here for tonight. It's the first time me stepping onto the platform here. So obviously knowing you two, Nate, Benz, over the past 3.5 years, developing the relationships offline, meeting in person, and then just continuing to grow. So I'm excited to be here, excited for you guys to have this platform, and I'm ready to rock out. So let's go.
Yes, sir. So like I said, I just want to reiterate what Nate was saying is that from that time we first met you, I don't watch you grow your platform, grow your personal group, grow your social footprint. Then seeing you hanging out with all the Black financial media guys that everybody knows and love. We done seen Lawrence with them at one point in time or another. So like I said, you've been on some of the biggest platforms out there. So we're happy to have you here, my brother. We do appreciate you for that.
Oh, definitely, man. I always look forward to any time I get to speak about, anything, you know what I mean? So I'm just excited to be here tonight, man.
Yeah. And let's get right to it. So one of the reasons why you reached out to me recently on a background conversation. I reached back out to you. And I think on our pod, we always bring on people that's talking about their story and talking about what the greatness they've done and the business and how much hard work they've done in their business and build their business up. And like I said, we've all seen what you've done. But with all ventures, it's ups and downs in it. Sometimes it's good, sometimes it's bad. So recently, the people calling me said, "Man, I haven't seen Lawrence in a while. What's going on with him? He hasn't been online. Is he okay with him?" I was assuming you was moved on with life and had some other things going on. But like I said, for the people that haven't seen you recently, what's been going on? Where have you been? I see you coming back now. So what's going on?
Yeah, man. I really had some situations over the past. I would say about past 4 to 5 months that I was dealing with. Really started back in like September. I had an issue with a financial institution where, there were some fraudulent transactions that was really on my account that I couldn't attest to. Mixture of ACH and debit card transactions that just didn't make sense. And so that was one thing that, pretty much set me back. During that process, I had that going on, but then also still having to be, really a husband, really a father, really a business owner. So you think about that, and then you're taking on different ventures, you're still doing events. So it was a lot. And, I think part of that was like, for me, like reflection, I think it was just, you kind of also get the wear and the tear. So we mentioned in the beginning part of the episode that over the past 3.5 years, like I really just hadn't had a break. Even when I got married, I never took a break. And so it's kind of like, you start to feel the effects and you start to get worn down a little bit. And I pretty much became fatigued, right? And everything starts collapsing on you at once. And the fatigue just gave in. That's really what I think just really happened. So I had to like really take a month off, really from like month and a half off from like really social media. I didn't teach a class like in December of last year. That was like the first time me not teaching a class in a month since like 2019. So you just think about the work I put in and the miles you kind of put on your body, whether that's physically, mentally, emotionally, spiritually, financially, whatever. I think it just all started to add up and take a toll. So,
and I mean, I know a couple episodes ago, Nate was talking about stuff going on with him. We all go through stuff in life on the personal side, and then when that combines with the work stuff and a whole bunch of stuff, it's a lot going on at the same time. And I'm sure it's a lesson you learn through trading. Sometimes in that those short-term losses, it's gonna happen. Correct. And it's more so mentally how you deal with it. So I guess that's the real question I have for you. For people that find themselves in that situation, things aren't going right now. I got 2 or 3 problems going on. How have you been able to cope with it, deal with it? What strength have you found? How do people in that situation help pull themselves out?
Yeah, how do they pull themselves out of that situation? Really, I think that's a really great question. And I think the answer to that is the best way I feel like to pull yourself out. I think so much in our community, we turn to like alcohol, drugs to like try to get out of like maybe a bad situation we're in. We turn to that and we think, alcohol or drugs is going to fix our situation. And then most people find out that it's not. And usually they find out maybe a little bit too late, per se. And now, you put yourself behind the 8 ball. So for me, I think, that's been probably like my biggest thing that I have been doing is going to the gym, right? The gym's probably been like really my number one outlet. I've been into the gym heavy, and it's a place that I feel like really allows me to like blow off some steam. And, I feel good about myself, I think, when I leave the gym. You know what I mean? So that is what I would say has been my biggest, you asked me, how have I been able to get through this? I would believe that the gym has really been that thing that's allowed me to be able to get through some of the darker days that I have had. So,
side note, when we earlier we was talking about Lawrence the platform. What always drew me to Lawrence was his young age but old soul, mature way of thinking. You feel me? So the answer he'll give you now, man, the drugs and alcohol, that's not the way to do it. I go to the gym because that makes me feel good long term, as opposed to doing that stuff that's only for a short term answer. And that's something that takes most people years of life to understand. So to point that out. The perspective that you have is very profound for somebody of your age. That's all.
Sure.
Yeah, I think it's a perspective that if more people in our community took, I think we would be in a lot better position, because it's inevitable to go through things in life, like it's going to happen. But what ways do you respond to those things, I think, is what's most important. So
for sure.
Yeah.
The thing about it is like, if the gym, has that always been something for you? Like, or is that a new thing that you found in this situation?
I mean, I've been going to the gym quite like at this same type pace that I've been at. I've been going to the gym like the past 2 years at this same type pace. I always have, I'm a former athlete, so I used to, work out a lot too at this regimen. So it's
former
not
athlete. What sport you play, Lawrence? I ain't never heard this one, man. What
I played football and I ran track. So
wide
like,
receiver?
I used to.
Right.
I play outside linebacker and safety.
Okay, outside linebacker. I can see that.
Outside linebacker and safety. So those were my 2 positions that I played. Yep. And then I ran track, so I did the 400 and the 800. So I mean, I would say that the gym is not anything new for me. It's not new at all. I had been in the gym, but over the past 2 years, I have been in the gym the most that I've ever been in my life, and
consistently.
The consistent. I wouldn't even say consistently, but I would say at the volume, because I work out 2 times a day. right now sometimes too. So I work out 2 times a day, like on Tuesdays and Tuesdays and Wednesdays. So my pace that I'm going at right now, I mean, I'm in the best shape pretty much of my life, and it's paying off.
So how do you? Let me ask you that then.
Go ahead.
Scheduling. If you're working out 2 times a day, you still got, like you said, husband, dad duties. You still got trading to do. You still got Black Wallstreet Originals to do. How do you find enough time in the day? Because that's my issue. I don't have enough hours a day to get all these stuff done.
Yeah, really great question here. I mean, as far as the timing, a lot of times I do it either. I usually do, like, if the days that I'm doing two workouts a day, I'm gonna do my workout in the evening, and then I'm also gonna do a workout in the morning, right? So I'll schedule it out. I think it's just about really committing to it, and then just having your set days. So I think one of the biggest things is like me being able to create an organized, system that I have of like when I'm doing certain things. So I already know when I wake up what exactly I'm doing and gonna be doing for the day, or like what does my week look like ahead of time. So like just planning and mapping those things out. Whether it's my class schedule in which I'm going to be teaching the community, whether I'm doing pickups, picking up my son from school, dropping him off at school, like all those different things. And then just like working around it. I feel like if you want it, you're going to figure out how you're going to do it. And so, you're going to limit maybe to some of the things that you would have otherwise been doing, right? Like how much TV do you really watch? You know what I mean? Like for me, I don't watch TV like that. I have a couple shows that I watch, but most of my shows are like, I'm a big fan of Power. So that just comes on and boom, you can catch that pretty much whenever because you have a streaming app.
Right.
I watch a little bit of sports here and there, you know what I mean, as far as basketball and NFL. But NFL is reserved pretty much for like Sundays for the most part. And then basketball is like, okay, I can pretty much catch that. I got league pass whenever I feel like I want to, check out a game. I don't always need to watch, every single game. So it's just like really, I feel like balancing out everything. Like what's your priorities? What things are a priority to you? What things matter to you the most? And you do those things. And then you just kind of make everything work. So.
And I mean, the key, like you said, there's priorities. I was having this conversation the other day. Matter of fact, was sparked by a post Ian and Master Investor Ian put out about. I scroll through the timeline and see all y'all in the comments so much. I know you got time to read 50 pages a day. Now, 50 pages a day is OD for some people because I understand you got a life. But the example he's given of we got time to do everything else.
Correct.
You feel me? Is I think a valid point for all of us is we all sit around and scroll the timeline too much, and so for some of us it's TV, and so just limiting those unnecessary things and locking in on that important stuff is very important. So I see that. That's important, bro.
Yeah. So like even for me, like I use social media from the standpoint of like I post my content, but I really don't sit around social media too long. Like people come to me, be like, "You seen this?" It's like, I probably didn't see it. Like I use it as a tool and a medium for me to be able to connect with people, grow my community, be able to, post highlights, and things like that. But as soon as I post, I'm pretty much off that. You know what I mean? I don't have time to sit there, like you said, really scroll all day. And yeah, it'll show if you do. So 100%.
For sure if you do. So my assumption is when you're not scrolling, you watching the markets. What's on your daily routine, weekly routine? What are some of the sources that you kind of look at, kind of get some information from, as far as just keeping up with the overall markets, as far as trading cues? Like, what's your information intake look like?
And my information intake looks like, I mean, for the moment, really, most times that I wake up, the first app that I'm really looking at is Yahoo Finance to see, what are the futures doing, right? Get an idea of what things are also happening in the foreign markets. So seeing how the European markets at the time, maybe getting ready to close, seeing how the Asian markets pretty much perform. And that's really where I kick things and, we'll start things off. And then pretty much after that, I go right into using apps like Tip Ranks, which I like, looking for maybe some scholarly type articles, maybe something like a Seeking Alpha that I have, really just trying to see, okay, like, is there anything interesting out to actually read in the morning? If I don't find anything interesting, you're gonna start taking a look at the stocks that have already been built into my watch list and start to see, okay, is there any price target increases or price target decreases that may have happened? Any type of news that may have came out overnight while obviously the eyes were shut, because sometimes that can happen. You could wake up and there's some news that could have came out. So just looking at that. And then I'll go to my charts, via a trading view, right? And start to look and skim and see okay, is there any opportunities that may currently be presenting themselves for today? Is there any stocks that may be moving in the pre-market that might be breaking over a significant resistance level or breaking under a significant support level that I may be wanting to look to trade when the market may be open? So I try to do that early on in the day, during the pre-market time, to be able to see, okay, exactly what things will I may be looking to go ahead and trade. So, yeah.
And I think that because a lot of people say they want to trade.
Mm-hmm. Mm-hmm.
I think, especially, and I know you understand. I'm going to say this.
Mm-hmm.
They see the flash of the quick day trade, the quick 1 day, 2 day expirations, the quick weekly, and don't realize, even in lesser risky situations, how much prep work it goes into
Correct
executing a trade.
Yeah.
You got to do hours and hours and hours of study to be able to see that setup that you like, and know how to properly execute when it comes. And I don't think people understand that part of it. The prep work of understanding the craft of trading itself, understanding the market itself, and applying what's going on today, what's going on right now in this particular setup, and how much extra time that takes, which is not actual trading time. And it's not easy.
Yeah.
It's not easy.
No. Not easy at all.
And it's just something that people see a lot. So, but let me ask you this. So since you've been studying, we just had recent big tech earnings. Have you seen anything you liked, anything you didn't like? What was your feeling? What was your feeling on that?
Yeah, another great question. I think one of the things that I don't like right now is I think that certain companies are trading with crazy high valuations again. And it's starting to become, what I've noticed is that the market is starting to become euphoric, where it's almost if that they're guaranteeing that certain names are going to do this. And I always find that to be a little bit dangerous. Not to say that the market's in trouble or anything, because I think the market will continue to, do what it has done. But it's a little bit puzzling when I do continue to see the same names being pumped up and getting these big price target increases. And it almost seems as now they're galvanizing the troops and they want to try to get everyone to get sucked in and everyone to get bought in and then pull the plug. And I'm noticing that happening right now, where there's so many, where there's a lot there. Quite frankly, there's a lot of distractions, right? There's a lot of distractions that people are not looking at these other names that have been in accumulation and are going to be those names in which institutions rotate into. So a large part of the high growth tech stocks that fell 70, 80, 90%, those are really your next names that are going to 5x, 10x, 15x, 20x. Those are where those are at. A name like NVIDIA, a name like AMD, a name like Meta Platforms, they're not 5xing from here anytime soon. They're not 10xing from here anytime soon. So you're not going to see NVIDIA go from being a $600 company, so basically we're assuming a $700 company now, to being $1,400 right away. Like, it's just not going to happen. And so what you've seen now is that all the volume has shifted there. But meanwhile, they're still kind of like coiling up and building things up a little bit more, right? They're still coiling this market, right, to the upside right now. So that's what I pretty much have noticed, to be honest with you. So.
And man, so it's two things that I've seen that we're in right now. The AI theme, which has kind of been going for a while. And then the underlying theme is this weight loss drug thing. And if you can tie, if your stock can tie your name to one of those, right or wrong, you've got a parabolic move for the past 2-3 months. And to your point, eventually you have buyer's exhaustion and somehow, some way, people are going to get trapped in these situations. Yeah. But the human instinct is, I've seen Nvidia go up 200% in the past 2 years. It has to be more there. But it's, I think the big conversation is we bring up Meta. I don't think people realize the market cap of these companies.
Correct.
And then you add the percentage move that we had a couple of days ago, it's for that big of a company to move that much.
Yeah.
When you put it in, it's not a penny stock. It's not a little $100 million company. So when you get that percentage move, what that really means to the market overall.
Exactly.
And so I'm with you. We don't want to chase the runners. When you speak of rotation, what areas do you see the rotation going into? Do you have some favorites, something you're looking for more in the future, or what does that rotation look like to you?
Yeah, I think the rotation right now, really great question here. I think the rotation is moving into those high growth tech names, right? Like those high growth, those names.
The Kathy names?
The Kathy Woods, yeah. I think the Kathy Woods names. I think those names start to ring a bell. Names like Tesla will get rotated into. Like, think about it. No one's talking about really Tesla, obviously outside of some of the bad things that have happened with them, right? That, people have seen. But it's like, it's setting up right now for like I've seen this rodeo before. I've been in this game. It's going to be 8 years pretty much once 2025 comes around. I've been doing this since 2017 and really studying this stuff since 2016. So you think about it, the 8th year is already now, where I've been actively trading for about 6 of those years, but studying this thing is 8. And one of the things that I've seen since 2016, when I was a senior in high school, what I noticed is that like these tide turns that we see where the cavalry gets sucked in, money never truly ever really leaves the market. It only just goes somewhere else, right? It goes somewhere else because people still want to get a return. They don't just sell to take the money back to the brokerage and then take it to the bank. Nah, they sell to be able to go take it somewhere else where they believe they can yield a better return, or where opportunity may be presenting itself. And so you mentioned a name like Kathy Woods, and quite frankly, everyone thinks that she's crazy. And if you're thinking about, Kathy Woods, you might be right thinking that she's maybe a little bit crazy with some of these things. But if you listen to how she talks, she's always putting numbers out there like 2027, 2029, 2030. Right? She's never speaking as far as, oh yeah, I'm investing in this because I think it's going to do this tomorrow. She's always making her moves based upon what she's thinking about the next 5, 10 type years. And so when I look at, even if when you pay attention to the the play on words, right? You think about it, she's talking about innovation. Right now, we are going through an innovation period. And so, yes, there's going to be some companies in that innovation space that fail, and that's just how it works. But I think overall, when you take a look in the year 2030, which is about 6 years from now, you're going to take a look back and think about all the companies that truly were innovating. You're going to see that there's going to be a lot of companies that 5X and 10X, and they got decimated because they quite weren't ready. Right. And sometimes that can happen with a company is when, it's riding sky high, interest rates were to the dirt, to the floor. And so these companies were able to get capital cheap, and they were able to expand and grow their businesses, I think, faster than what they even can handle. Right. And I think we see that with a lot of small businesses as well. Like even I'll even speak like for BWSO, the way it grew, I probably couldn't handle it totally the best way. So it's the same thing with these companies on the stock market. They're been like, even think like a company like a Zoom video communication.
Right.
Like when the pandemic hit, they exceeded all expectations that they had for the next 5 to 7 years for the company, literally in like 3 to 6 months. And it actually fell into their lap, right? I want people to think about that. Like it actually fell into their lap because of the pandemic. They were able to increase what they were doing tremendously, like tremendously. So, Yeah, that's
And
what
then
I would say.
naturally, what happens in that case is though, naturally as a business, so that scenario, boom, we got this big windfall. Now we can hire a bunch more staff, do all the random dream ideas we had cooking up. We can do this, we can do that. Oh, now what happens? Demand suddenly slips. And how do you get back to your basic business and continue to make money? I think Zoom is a prime example of it, because we've seen in the past 3 years Zoom go from nothing to a household name to we don't need Zoom anymore to now. If you really look at the reports, Zoom's still making money. People are still using Zoom. They had to change, get a little more enterprise software, but I mean it's a business is gonna have up and downs in it. Kind of how we started this whole conversation off. Business and trading and everything's gonna have cycles in it. And how do you take advantage of those cycles? Is the key to it all. And something you said about Kathy is important. If you go through the ARC funds, the date she puts out for a lot of these innovations, as you said, it's 5, 10, 15, 20 years in the events.
It's down the line. Everything's down the line.
I can remember 3-4 years ago reading Kathy's breakdown of C3 AI and what the AI movement's going to look like when everybody starts trying to adapt AI and trading and investing. Sometimes it's not even what the stock is doing, the company's doing. It's what the theme of the month is, theme of the week is, theme of the year is. So if you really go back to all Kathy stuff is public. If you go back to those Kathy conversations about C3 AI years ago, particularly in IUPATH, a couple other companies, it's the same overall AI theme that you hear now, which is the rave of the time. And she was talking about that 2-3 years ago.
Correct.
The same exact rationale, the same exact adoption phase that Kathy's calling for in these companies 2 or 3 years ago. We've seen it happen. She won't be great for that, but we saw her call it. And so Bitcoin. So let me ask you this then, since we're talking about ETFs. You're an investor who's trying to go look into something more next level tech stuff. Do you feel like doing somebody buying who's not really don't have much time, much effort, but wants to invest in something innovative? Is some of these innovative ETFs with their questionable high fees, is that a better way to go? Or should somebody, what do you recommend for somebody in the BTO who BWO who kind of wants to invest passively but wants a high return in that innovative phase? Should they do it themselves? Should they do ETF? Like what do you say?
Yeah, I would say that like as far as, because one of the things I think that happens is that people, so I want to talk about this. One of the things that people happen is like people try to go out there and get all these companies individually. And it's very difficult to be a stock picker. Like stock picking is extremely hard and it's extremely difficult. So I think when you're taking a look at going that ETF route of saying, hey, I want to maybe choose a specific sector, right? And bet on that sector. There may be companies that you might have invested in single-handedly that might just fail, but the sector as a whole may really, really succeed. And so by you being in an ETF, you can benefit from just being around, being in the whole sector. So you don't just put all your chips in one basket, right? And put yourself in a position to where, if that company fails, you can get clapped. And I think that's one thing that I really, I like about the ARC ETF and I like about some of these other ETFs is that there's a lot of high risk names within them. And you might be doing yourself a disservice just going ahead and single-handedly getting shares in one of those high growth names and the company drops another 90%. But if you're able to get in a sector ETF, you protect yourself and you say, you know what, I'm betting on this sector as a whole. So I think that's what I would say. And as far as someone newer, I think you have to be willing to understand you don't have to have an all-in number. I think a lot of times as newer investors, people think that they have to go all in at this number, right? And if they don't, they're not doing it the right way. Like, nah, chip away at some things. You know what I mean? You don't have to put all your capital in at one time. So yeah.
And
Go ahead.
when you say the specific themed ETFs, I think that's a real important one too. For example, the DNA ETFs and the ones that do a lot of bio stuff. If you're not a doctor, it's going to be hard for you to understand what's going on exactly. Understand the FDA reports and a lot of this medical stuff. But once again, if you let Kathy and them do their research, a lot of stuff that she was saying about Moderna and stuff years ago, we saw play out over the pandemic, and just a glimpse of what they're talking about. Let the experts do their work on those type of things that you don't know about. Let them do the research, and so I'm with you on that. I agree with that. I agree with that.
Yeah, let people do their work, and let them do their jobs. You know what I mean? I think that's the biggest thing I would say from takeaway. Like, let them really do their jobs. Yeah.
So let me ask you this: what's your rest of the year 2024 market outlook? We're back here at close to all-time highs in an election year, but we're a little far away from the election. There's a lot of different themes. What do you feel like overall market kind of looks like for the rest of 2024?
Yeah, great question. I think the market just has a bit too much momentum right now to where I don't think it's going to be difficult for the market, in my opinion, to fall from here. Right. So I think the market has an incredible amount of momentum where it's at. And so I don't think you're going to see any fall here at all, anything drastically. I think if anything, the market will continue to pump more than dump. And I think there's certain names that may be rotated out of, but once the Federal Reserve starts cutting rates, which they're expected to do starting in June, from what they illustrated so far, I know that there were certain people that was expecting, interest rates to maybe be getting cut maybe a little bit sooner, as soon as really this March meeting. But I think people got a taste of the Fed. Like, the Fed pretty much just said, like, let us do our jobs. You know what I mean? Like, the Fed pretty much just had to step in. It's like, yo, let us actually do our jobs. You guys are trying to illustrate and speak about what we're gonna do before we actually even do it. You know what I mean? Like, the Fed was put in that tough position where people are illustrating and are speaking for them instead of them being able to do exactly what they set out to do. So
Ben soapbox real quick. I always rant about how we live in this funny era where everybody wants to be anti this, anti that, anti-government, anti-president, anti-POW, anti-Fed. I hate it here in America, whatever the case may be. But in reality, shit's kind of cool for real. Everything's going well. So I still have to say this. Given the situation, Powell has done an excellent job. The hard landing that everybody was afraid of, the recession that we were afraid of, the dollar crash, and everybody knew for a fact was going to happen. Every year for the past 2 or 3 years hasn't happened, at least as of yet. But because of the climate of the world, the average talking head ain't going, especially that's appealing to regular man, ain't going to say, yeah, whatever Powell was doing, he's done the right job. He's done a good job, and he's told you he's going to do the entire way. But we just don't want to believe him. We still want to doubt him. And that's kind of the funny part. He told you, hey, I'm looking at the data. This is what it looks like, but we don't want to go against it. And it's I just want to say that the way Powell's handled everything. What more could you have done? That's what I'll say.
Yeah, what more could you have asked for him to do? Yeah.
So you don't believe March is the cut date, though.
Nah, I don't believe that they're going to cut interest rates in March. I don't see a rate cut happening until June. So I think that'd be the first rate cut in June.
Let me ask you this: as a longer term swing trader. How are you trading around that? How are you incorporating that into your trading strategy?
Yeah, I think that's the element that of the market that you even saw it last week. It didn't like it. When it didn't like it. The only reason the market is going up right now is because Meta saved it. Meta came in and saved the SPY and the QQQ from really turning because they were starting to.
I was at QQQ last week, and like you said, I saw Apple bounce back, started seeing weakness across a couple of those higher tech sectors. But once that Meta report came out, everything
everything exactly. So Meta really saved it. If it wasn't for the print they had, then the market was going to be coming down even further. So the QQQ, man, like, you know, it started to turn down. It was at 416. I mean, Meta, like I said, just saved it. You know, it was one of those points where, you know, now it's starting to get that momentum again. And I think really what it is that people want to see 500 on the SPY too. So there's a huge milestone number that's pushing the market towards. It's right, you know, it's right here. The SPY is pretty much $2 away. So being at 5, like, so it's all those different variables as to why I believe that, you know, the SPY has been performing the way it's been performing. So yeah.
But you said you thought it's going to keep pushing. So what do you have an end of year target for the SPY?
Currently not right now. I think it's just still way too early. I think it's way too early. We're at top here, still at top of February. So for me to put a price target on the SPY where I see it at the end of the year, I think it's still way too early. I think the SPY will be higher than where it is, though. Okay. I will say that. I do think it'll be higher because once I believe those rate cuts happen, I believe there might be a pullback in March if they don't cut rates, which I believe they won't. Right, you may see that pullback in March, and then we come into April. Earnings come out. You may see. I do think that Q1 of this year, I think some earnings may be a little bit sluggish. So I think in April, when Q1 earnings come out, I do see things being a little bit sluggish. So I think months like March, April, and May may be slower months, and maybe months in where the market may not perform the best. Now, I think you could see anywhere from a 3 to 7% pullback on each of the indices that can happen. I don't see anything like a 10 to 15% on a correction type tip. Only way I would see that if something left field happened and, you know, a new thing was kind of introduced. So the only type of pullback that I think you'll see from the indices will be a 3 to 7% type pullback. I think once, you know, I think that can happen. That comes into May. I think once June comes around, rates get cut. And I think you'll start to see the market push up even higher. And I think going into the election, I do believe that the market from where it's currently at right now will be higher by the end of the year. But as far as a price target, I mean, I don't really have one, to be honest with you yet. I think I'll probably start maybe some price targets towards the end of the year, maybe in months like June and July when we're kind of like halfway through the year.
Right.
So,
and basically everything you said is exactly how I feel. And it's more so the strength we've already seen combined with the election year. Without a serious black swan event, we may see some heavy sideways trading, but I don't see any type of big pullback. And what I will say is, I didn't see us getting this far this fast.
Okay.
So that does concern me a wee bit. But we'll see what happens. We'll see what happens. So, yeah. But kind of like I was saying earlier about if those Mag 7 can't go but so much further, what do you feel like is the next leg of the market to keep it going?
Yeah. So
does the cyber theme come back? Like, what do you kind of see as that next theme that really pushes the market? Because even if you say the Kathy names, they really can't push the market. So what are those next level of big companies you feel like are going to keep the SPY rolling? If I'm trying to say, you know what I mean?
Yeah. What's those next level? I think a name like Apple and a name like Microsoft. Obviously, two heavy dominant names. Like Microsoft was up $8. I don't think they'll waver. right? And I don't think you've seen Apple truly go on a breakout yet. It's still under $3 trillion in market cap. So Apple, the sleepers that I think could carry the three, well, I won't even say sleepers, but the three names that I know for a fact that could would be an Apple, a Microsoft, and an Amazon. I think those three names right there alone, even if there is dips in Meta, even if there is dips in Nvidia, AMD, which likely will happen, a name like Amazon, a name like Apple and a name like Microsoft will be able to stay upright enough and might be able to push still higher to be able, because think about it, Apple hasn't really done anything, you know, and not that it's a negative thing, but what happens when Apple finally breaks above 200? That could be something that could keep the market, kind of pushing higher in that catalyst. And then Microsoft is a name that I don't see slowing down anytime soon. So
Apple's been bouncing in that 180 to 200 range for a while now.
And so it's just consolidating. So finally, when it breaks above that 200 from a technical standpoint, it's going to have some room to really run. So, yeah.
That 180, like I said, that's kind of the straddle I've been watching, is that 180 to 200 on Apple. If it breaks solidly through one or the other, then you got some issues. But that's kind of like in the past, of all those big ones, it's the one that hasn't broke out, really hasn't moved yet, and has still consolidating. So we're going, and so back to earnings. Did you watch Apple's earnings? Did you pay attention to those?
Yeah, I paid attention to Apple after hours, even though obviously Meta had all the attention on them.
Right. That's what I was asking.
Yeah. So I was able to still look at them. I think when you're looking at Apple right now, 29 price to earnings on the 12 trailing months, looking at a market cap of 2.9 trillion. Solid. Apple, I think with the Vision Pro, I think that's their next product that could really be a mainstay for them in the next 3 to 5 years. I think the Vision Pro has an incredible opportunity to grow. I think obviously what they're putting out right now is just to test the market to see what actual market is there for that product. I also think that Apple will continue to do more licensing deals. I think Apple is just like, they're cool with these other names getting all the attention right now. They're cool with it. It's like, okay, we're in the lab. And so when Apple's quiet, as they have been, that's where I start to say, what are they actually, we know they're like, what are they doing over there? We know they're not doing nothing. This is a company that's sitting on, so much cash. They have more cash than countries in the world. They have more cash in their reserve than countries. So I'm like, man, Apple is they got it. They got something over there that's brewing, and they're cooking up, and I can't wait to see what's in store for them. So
I see. I don't know what that is. They managed to build on the existing platform for so long, creating revenue streams from the existing platform so long.
Yeah.
That I think the Apple Car or the whatever that the Apple investors have always wanted, the new product, it might just be building on the platform. And so in my mind, what I was thinking about that is the Vision Pro is the new phone.
Yeah.
And I think people don't realize that.
Not yet, because it's still brand new. They didn't realize the iPhone was going to be the iPhone until a while. And so the Vision Pro to me is still so fresh, and it's creative, and it's futuristic, and the way it is now is not how it's going to be 5 years from now. And so, you take a look at the first generation of the iPhone, it's not what we have in our hands now. It's not the first generations of the iPhone were pretty much prototypes. You know what I mean? To see actually what could work, what were things that were good about it, what were things that were bad about it, what were things that we could do better. Like they realized after a while, like the fingerprint thing wasn't really ideal. Like us doing the fingerprint, but the face, the biometric, you know what I'm saying? So there's certain things that you learn by putting out your products and seeing what may work. And I think what Apple's really good at is not being scared to put a product out and test the market. And when you have the cash, it's easier to do that because you can put a product out and test the market. And even if you might not, hit certain metrics, you're not you have a plethora, you have a big bankroll to be able to back what you may be trying to do.
That's a great point. And the thing, and as they get this market data on the Vision Pro, as it becomes popular, my thinking on it is this here. Mm-hmm. The number one thing we hear about how the product may fail is the price point up.
Correct.
I don't think most of us realize the price point of your phone. Fact. The actual price Apple is making off your phone. What Apple considers the paid for price of your phone. But what happens is T-Mobile, Verizon, whatever the case may be, subsidizes that price for you, breaks it down over those 12 months, and you don't realize you're paying $1,200 for that phone. Correct. Eventually, at some point in time, the same thing's going to happen with the Vision Pro. It may be a buy now, pay later situation. Who knows what that is?
What that looks like, yeah.
But once that barrier of entry comes down for the regular person, I can pay for this over the next 2 years, the same way they're doing with the phones. Yeah. The price point doesn't matter anymore. And I think that's the one game changer which people aren't incorporating is the same game and looking at all the videos and things. Once in the marketplace for 2 or 3 years, all the capabilities that most people do on their phone, while you're able to do on there, the choice will be do I want a phone or do I want a Vision Pro? That'll be the choice. Yeah. So that's I'm as a longtime Apple shareholder, fan of the company, fan of what Tim Cook does over there, just as a business admirer. Saw the commercial today for the Super Bowl with Ludacris and them. I love what they're doing over there as a company. So let me ask you this. Listen. And this my last question for you. We'll keep it on Apple. Somebody who's seen Apple run the way it's run, seen it split all these times, as somebody who's starting their portfolio, would it be too late to buy Apple? Have you missed the run, missed the boat? What do you say?
I would say that I don't think you're too late to buy it, but I think you have to be realistic. What does it take for you to get 100% return from here? Apple has to go from being worth $3 trillion to being worth $6 trillion. So the question about are you too late? I would say that it's not that I don't think you'll get a return, but I don't think well, let me say this. It's not that I don't think you'll get a return, but I know for a fact you won't be getting a 10x. I mean, Apple's not going from 3 trillion to 30 trillion. Like, that's just not going to happen. And so it's going to take a lot of money to really move this train. And, we're just hitting now where we're getting companies that are hitting $1 trillion, $2 trillion, $3 trillion. So if you're thinking about a 10x from here on Apple, I mean, that's just not going to happen. Apple's not going to become a $30 trillion company. It's just not going to happen. And we've yet to even see a $10 trillion. Hell, we haven't even seen a $5 trillion company, right? So, that's, I would say that from the standpoint of, you can invest in Apple, but don't be expecting to get a world-class return. That's just,
understanding the cost risk basic. So I think in my book, Apple is kind of like older investors' utilities used to be. Slow, steady, going to continue to improve, going to be a profitable company, almost a necessary part of everyday society for the country. So you ain't got to really worry about too much of it. Not going to get the 10x. but you're not gonna lose 10x either. You know what I mean? That's kind of what you. The odds are you'll probably get 1 or 2x, 3x if you keep it for several years. You should pick up your dividends and go on. So, once again, we're on the same page with that, brother. My brother, it's been a good talk with you today. I appreciate your time. If the people want to get in contact with you, follow you, check you out, how can they do that?
Yeah, man. So they definitely could tap in with me, Mr. Lawrence.e on Instagram. That'd be the number one place you could tap in, really scope things out, tap onto some lives, get some, some good info, some free info, and, just fill me out. So that's where you can tap in.
What I say is, all of my young brothers, my little niggas, people that got kids, younger kids, teenage, 20-year-olds in that area, I always recommend them to go check out Lawrence stuff. Me personally, my godsons, all of them, I tell them check out Lawrence just because listening to me talk about stuff doesn't always hit the same. Then it's coming from somebody who's of a similar age range, similar viewpoint, seen the same things, do the same things. So I as somebody I recommend for everybody, and I say that genuinely. I don't turn my own God kids on as any of your body. So
man, I appreciate that.
Yes, sir. So for everybody out there, like I said, I recommend you checking out Lawrence. Once again, Mr. Lawrence, I do thank you for your time this evening. Yes, I do appreciate you, my brother, and continue health, continue wealth, continue success. And we're going to definitely get up and do some more work together, my brother.
Yes, sir. Yes, sir. Glad to be here, man. Appreciate you having me on once again. The Extraordinary Investment Group podcast, man. So make sure y'all continue to listen to this podcast on all platforms, y'all. So let's get it.
Let's get it, my brother. Thank you very much. Have a good one, my guy.
Yes,
Thank
sir.
you.